Hello everyone, welcome back to mForex. In the previous video, I shared you my information about the fundamental analysis, and in this video today I will share with you information about the technical analysis. So if you are new to these articles will give you the big picture behind what is happening on the chart. And if you are an old hand, this article will help you to ensure that you haven't strayed too far from the basic. So let's start our video today. First, let's talk about the most basic question. What is the technical analysis? So it is a tool or a method used to predict the probable future price movement of a security such as a stock or a currency pair based on the market data. After understanding about the definition of the technical analysis, we come to the first tool. It is the past price. Technical traders believe that current or past price action in the market is the most reliable indicator of the future price action, and technical analysis is not only used by the technical traders. Many fundamental traders use fundamental analysis to determine whether to buy or to sell into a market. Having made that decision, then they use technical analysis to pinpoint a good or low risk buy entry price levels. For easy monitoring market price changes, here I would like to introduce you to a tool that is charting on different time frame. Popular time frame that technical analysis can use. It is 5-minute time frame, 15-minute time frame, 1 hour time frame, 4-hour time frame, and 1-day time frame. The time frame a trader selects to study are mostly determined by the individual trader trading style. And we have two types of traders here. The first one is intraday traders, which are the traders who open and close trading position within a day. Favor analyzing price movement on a shorter time frame, such as 5-minute or 15-minute time frame. And the other one is the long-term traders, who hold the market position overnight for the long period of time and are more inclined to analyze market by using hourly, 4-hour, daily, or even weekly chart. And we have some information that you need to remember here. It is price movement that occur within a 15 minutes time frame may be very significant for an intraday trader who is looking for a very good opportunity to realize a profit from a price fluctuation occurring during one trading day. However, that same price movement viewed on a daily or weekly chart may not be particularly significant or indicative for long-term trading purposes. And we come to the next one. The change in the candle color may signal market changes. So we need to pay attention to the candle to have a premise for future prediction. Candlestick charting is the most commonly used method for showing price movement on a chart. A candlestick is from the price action during a single time period of any time frame. Each candlestick on an hourly chart shows the price action for 1 hour, while each candle on the 4-hour time frame showing the price action during the 4 hours. And the candlesticks are formed as follows. The highest point of a candlestick shows the highest price of a security trade during that time period, and the lowest point of the candlestick indicates the lowest price during the time period. and the body of a candlestick, the respective red or green block or thicker part of each candlestick, as shown in the chart above, indicate the opening and the closing prices for the time period. If a green candlestick is formed, indicates the closing price is higher than the opening price. And on the other hand, if a red candlestick body is formed, then the opening price is lower than the closing price. Besides that, candlestick pattern, which are formed either by a single candlestick or by a succession of 2 or 3 candlesticks, are some of the most widely used technical indicators for identifying potential market price change. First, we have the doji candlestick, indicate indecision in a market that may be a signal for an impending trend change or the market reversal. The single characteristic of a doji candlestick is that the opening and the closing price are almost the same, so that the candlestick body is a flat line. There are several variations of doji candlestick, each with its own distinctive name as shown in the illustration below. The long leg doji, a doji like this appeared after an extended uptrend or a downtrend in the market. It is commonly interpreted as a signal of a possible market reversal, a trend change to an opposite direction. The dragon doji, appearing after a prolonged downtrend, signals a possible upcoming reversal to an uptrend, and shows sellers pushing price substantially lower. But at the end of the period, the price recovered to close at its highest point. Gravestone doji represents bad news for buyers. It indicates a strong rejection on an attempt to push the market price higher and thereby suggests a potential downside reversion may follow. And the last one is a fourth price doji. The market opens, closes, and in between conducts all buying and selling at the exact same price throughout the time period. The moving average is the most commonly used indicator by the trader. We have some simple ways to use it here. Firstly, it can be used to determine the trend. As long as the price remains above the 15th period EMA, the price can keep going up, and in the other hand, if the price keeps below the 15th period EMA, the price may continue a downtrend. The higher the moving average number is, the more significant price movement in relation to its considered. For example, the price crossing above or below a 100 or 200 period moving average is usually considered much more significant and reliable than price moving above or below 5 period moving average. Daily pivot point indicators, which is usually only identify several support and resistance levels in addition to the pivot point, which are used by many traders to identify price levels for entering or closing the current trades. Pivot point level often mark significant support or resistance level, or the level where the trading is contained within a range. If the trading strong through the daily pivot point and all associated support or resistance levels, this is interpreted by many traders as a breakout trading that will shift the market price higher or lower in the direction of the breakout. Fibonacci ratio or level are commonly used to pinpoint trading opportunities and both trade entry and profit target. data arise during the sustained trends. The primary Fibonacci ratio are 0.24, 0.38, 0.62, and 0.76. Fibonacci retracement are often the most used Fibonacci indicators. After security has been in a sustained downtrend or an uptrend for a long time, there is a corrective retracement in the opposite direction before the price resumes the overall long-term trend. Fibonacci retracement are used to identify good loss risk and trade entry point during short retracement. Once again, you never have to do one of the calculation. You just plug the Fibonacci indicators to your chart, and it will display on the various Fibonacci levels. Pivot point and Fibonacci level are worth tracking even if you don't personally use them as indicator in your own trading strategy, because so many traders do base buying and selling move on the pivot point and Fibonacci level, and if nothing else, there is likely to be the significant trading activity around those price points. Moving average and most other technical indicators are primarily focused on determining market direction up or down. There is another class of technical analysis whose main purpose is not so much to determine the direction of the market. It will determine the market strength by measuring the strength of the price movement. Momentum indicators help investors determine whether current price movement or likely represent the relative insignificant range-bound trend or an actual significant strength. They can serve as early warning signal that a strength is coming to an end. For example, if a security has been trading in a strong, sustained uptrend for several months, but then one or more momentum indicators signal the trend is steadily losing its strength, it may be the time to think about taking profit of your trade. So there's all information which I want to share with you today about technical analysis. Hopefully it will help you some more information on this field. Looking forward to see you on the next video. Thank you.